Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again on the euro currency and keep up with the trading plan. So in general, this week, euro currency was following and was driven by the same fundamental factors. It's actually the background of the new fundamental factors we discussed in details with the recent couple of weeks. So in two words speaking, the new environment suggests no inflation currently and mostly explains the recent jump in the United States dollar that were lasting since the beginning of the year till the approximately mid of the March, due to the starting of the global economy recovery. And that mostly explains why as interest rates, as stock market were rising together. And since Fed stands rock hard in their suggestion that inflation is not hazard right now, and keeps interest rates flat, that already has made an impact on the performance on the interest rates and on the dollar. At the same time, in the last week, we've got lots of positive news from the European Union. So if you have tracked that, you probably know about the good earning results of the companies. That was really good, and it was relatively rare example when the European Union outperformed the United States rivals, where the earnings were even better than in the United States. Second, Christine Lagarde gives some hint that in summer they could start to contracting on the bond purchasing program. Although later on Friday she has denied that and said that's probably this will not happen. But some doubt already have been put on the markets. This rumor has been sound, and there's no usually smoke without a fire. And if we will get positive performance of the European Union economy, this probably could become the reality. So at least the first bell already have sounded. Finally, it also was relatively positive statistics, as from the United States and from European Union. And despite that, Europe is lagging to the United States on vaccination, its overall performance that we see stands positive. And combination of all these factors also suggesting that the Fed will keep the policy intact on the next meeting, that will be next week. All this together supports current fundamental trend. Market sentiment also is very good for the euro currency. If you have taken a look at the Commitment of Traders report, you probably see that the net long position have increased. Significantly open interest is rising, and hedgers also open significant positions against the euro appreciation. So they're hedging against the rising of the euro. Technically, we also have no real reasons to suggest that something goes wrong. So it's hard to fault the covered tendency that we see currently. Here on the daily chart, we have a few moments that are important and led us to create the training plan for the coming week. Yes, on the previous couple of weeks, we were really hoping that we will get some kind of the head and shoulders that was just potentially could be just perfect scenario for us. But unfortunately, you could see, or fortunately maybe, depending on whether you have taken position or not, you can see straightforward upward action. From one point of view, this is very good and shows significant strength in the market, because first of all, this is V-shaped reversal, and second, straight breakout of the confidence resistance area here without any respect, actually. It's rising right to the resistance level where the market stands right now. This rally tells a few moments to us. So first of all, market now is turning to another trading range where it was previously dropping out. So you can see now it stands approximately 120, 124. Here's market were protecting this area. So it was the first lows had been created, then it was be broken. Market protect, return back of the price in this range, collapse. Here's again, market has broken it up and returns back inside of this range. Since market stands now in a new trading range, it is crucial to stay there. Currently, fundamental picture suggests that probably this should happen. And currently, there's no reasons to suggest that market could somehow drop out of it. But still, from a technical point of view, this is very important. And for us, 1960, 1950 is a crucial area right now. It coincides with the lower border of this new trading range and also its confidence support. Since market is not at the overbought here, it's no big reasons for market to show very deep retracement currently in the market. Additionally, we have 120 area, so overall retracement might be not very strong because market, as I said, not at the overbought, and if market has passed through the strong confidence resistance, I will not be surprised if we will see just minor pullback here or even no pullback and market will just continue upward action. That's also is possible. So a combination of these two moments creates a really clear situation for position taking. We're considering taking the long position from that level or for that one, with the stop somewhere below this area, because this area right now is crucial for us. And the market should not drop out of this area, drop below these levels currently. Still, chances on retracement exist, just because when you take a look, currently market stands with the 21 area fib level, fib resistance. So maybe minor pullback here could happen. That's what we intend to consider on the common week. On intraday charts, guys, currently I do not see anything, so we can't say something about the retracement since rally has happened just on Friday, and market has not enough time to show a response on the resistance. So it's yet to be seen on the maybe during the couple of sessions probably. So unfortunately we can't speak on about the butterfly here because of this downside spike. There's no the butterfly. It's too early to speak about the hand and shoulders or something of that sort. So it's still unclear what the shape of the retracement might take. That's why currently we can't discuss the possible pullback if it will happen. But as market stands at the resistance, as I said, chance on that pullbacks exist, and we consider these two levels for position taking. This situation, guys, also shows the importance of the splitting of the position, the strategy to split your position and take the gradual entry on different levels. For instance, in last week, if you remember, we said we consider two levels, but you could split your position and take the 1/3 around 120 because we are not sure that the market definitely will drop back to this area. And that has happened. You can see actually the market has completed just the BCD, got this triple to buy here and jumped up. So here's what could happen again. So since we have the very strong fundamental background, it's relatively clear, it makes sense again to think about the splitting on the position and take position gradually on two levels if market will able to hit both of them. So, but anyway, overall situation in the euro currency stands positive. Currently we do not have any reasons to suggest some problems or have some doubts about the current situation. Let's keep watching and hope that we will get some pullback in the beginning of the week from the resistance area where the market stands right now.